This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping this show on July 27th, 2012. Our time is 8:41 Mountain, 10:41 Eastern. Radio show runs AM 640 in Toronto, 630 CHED in Edmonton, QR 77 in Calgary. If you ever miss a show, they are archived on Harold's websites, rarecoloreddiamonds.com, also HESradio.com. You can be a part of our podcast. Sign up for it on iTunes. We are portable. You can take us anywhere you go. It was a very good week for precious metals, and you should get our newsletter. It is the companion to our radio show. We have some outstanding stories we want you to read. Connect with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold and silver, platinum, and palladium. Speak with them. They'll get your name on the list for our free weekly newsletter. It's sent out via email. You can go through it in 5 and 10 minutes if you want, or you can spend hours. The telephone number, 1-866-623-2002, 1-866-623-2002. The website is wwpmc.com. And as we start the show today, we have people agreeing with us, major people. Bill Gross from PIMCO, who runs the world's top bond fund, wrote on Twitter that real assets are a better bet amid negative real interest rates. We've been talking about that for a few weeks now. He also said investors will be able to maintain purchasing power with real assets. Barron's interviewed Stephanie Pomboy, founder of Macro Mavens. She said, coming, the end of fiat money. She sees the world hurtling towards a day in which money will again be backed by gold or other hard assets. Until then, she also sees plenty of trouble. You can read that full article. And she says, hard assets, that's the place to be. Robert Fitzwilson, money manager for 40 years. As investors, the only path to safety is the transition to something that cannot be inflated away, such as solid companies, energy, collectibles, and precious metals. And Harold, we would add diamonds on that list as well. But a lot of very smart financial minds agreeing with us. We've been talking about this for 10 years. You need to have an allocation of hard assets. And as we do our show today, the United States, their economic growth slowed to 1.5% in the second quarter of the year. The United States is slowing down. The world economy seemed to be in sync, and we have a global slowdown. The central banks at some point, Harold, are going to have to step in and do quantitative easing, which will be positive for hard assets.
You bet it will, Randy. Actually, all in all, it was a very good week this week. You know, the markets tend to be slower during the summer anyways, but again, there's so much going on in the world at this point that, again, the markets are fairly active. This week, on Thursday, there were some positive comments out of Europe that made the euro skyrocket, the U.S. dollar plummet, and gold and silver stocks and other markets really took off this week. You know, the funny thing is that gold is doing extremely well. When you consider that, again, in the last 9 to 10 months, we've sort of seen the market in a sideways to lower pattern, the fact is that gold is still doing extremely well. No matter what all the drama is in the world, all the negative sentiments towards gold, we're still trading at over $1,600, and we're going much, much higher. Again, a lot of the slowdown is due to, you know, a tremendous situation in Europe where you have, 4 or 5 countries on the verge of going bankrupt. You've got currency devaluations going on. You've got tremendous uncertainty, and again, no matter what, and all the trashing that gold has taken over the last 8, 9, 10 months is still sitting only $300 or less off its all-time high. It's still very possible, we still have 5 months left in the year, that we could definitely still see gold not only get above 1900, break 2000, and possibly go as high as 2200. So again, this year has not been a good year. There's so many reports that come out on gold manipulation and how gold is going to fall and how it's not a great investment and that type of thing. All that comes from Wall Street. All that comes from, again, the opposite side of the trade that that feels that their markets are going to do better. And again, for the last 11 years, we felt that gold, because of certain things that was going to happen in the economy, would be one of the best investments, and that has proven to be true. So this week, Europe came out, said that they're going to do everything they can to keep the euro strong. The euro went from below 120. It's trading at almost 124. That caused gold to rally very strong on Thursday, silver. So as we're actually taping the show today, gold is trading at 16.20, silver's trading at 27.70, crude oil's back up to $90. The US dollar fell heavily on Thursday and is basically even on Friday, and the euro went up 3 to 4 cents this week, which is extremely strong for the euro. So all in all, I'm very enthused about what's going on. What we're looking at is possibly one of the worst financial situations that any of us have ever gone through. In fact, at times it's so confusing that most people just don't know what to do. That's why we've really taken the stance that we want to not speculate, be extremely conservative, because the last thing in the world you want to do at this point is make a big mistake. One mistake at this particular point can wipe you out, and we just don't want to see that happen to the listeners to our radio show. So basically we're still with the same recommendations. However, we just feel that gold has done extremely well with all this negative bashing that's gone on for the last 9 months, and gold is ready to take off again. Now, if they do come out with quantitative easing 3, which I personally don't see any way that the Federal Reserve and the U.S. governments and the governments in Europe are not going to do that, because we have a stagnant economy that's going absolutely nowhere. So the bottom line is that if they put additional funds back into the marketplace to try to spur the economy, and it's going to take over $1 trillion in which to do so, it's going to cause the U.S. dollar to fall, gold to rally, silver to rally, and actually stocks will probably come up and make new highs. I am not bullish in the stock market at all. My feeling is that you don't invest in stocks in a country that is also on the verge of bankruptcy or in the financial status that the U.S. is and that Europe is in. However, again, these are markets that people have different views on. The last place I would put my money at this particular point is in paper assets. It's so easy to lose your money in the stock market, again, where it certainly is extremely important for investment purposes. It's more like a gambling casino at this particular point, and certainly not the place to really trust your retirement funds unless you're willing to speculate. So at this particular point, gold has done extremely well. This is still a good week. We're back above 1,600 in gold. I'd love to see gold break 1,625 and stay above that for at least 2 to 3 trading days. I'd love to see silver go back over $28, which is only 30 cents from where it is at this point. And again, to get 2 closes above $28, we could see a quick run to $30 to $32. Crude oil is trading at $90 at this point, and that's with the recession going on in Europe and in the United States, and with China having their issues. Without that, oil would be trading right back up at about 130 to 140 at this particular point, and I'm still extremely bullish on crude oil. I believe crude oil is one of the best investments you could make at this point. I believe that Saudi Arabia and other oil-producing nations are having massive problems, and again, I do believe that crude oil will be trading in the 140 to 150 range, and if we get continued situations in the Middle East with Iran, Israel, Syria, and all those situations, we could be looking at 250 in oil. So again, we recommended oil when it was back at about $100. The market fell back to $80 when we had issues with Europe. Now the market's back up to 90, and again, I think looking very, very strong at this point. Are the situations in Europe getting better? Absolutely not. The fact is that Europe is on the verge of destruction financially, and again, unless they really get their act together and put a fortune back into the markets, which is going to, again, affect the currency markets in a huge way, again, I just don't see Europe getting on track at this particular point. But I do see ultimately why we recommended gold was massive inflation, and I do believe that that's 4 to 5 years from now, but I do believe that that will bring gold prices well above levels that nobody has really even talked about before. So again, I'm still extremely bullish on all of our recommendations: gold, silver, crude oil, and I think are amongst the strongest commodities to trade. And again, we're very, very bullish on diamonds. They're just doing absolutely phenomenal with Europe in big trouble, and also what's happening in the United States. So all in all, the game plan is to own physical precious metals. You don't want to heavily leverage anything at this particular point. I know people feel that there's opportunities out there to make some money, but the fact is that if you're wrong, you're going to lose your money back, and that's the last thing in the world we want to see. We want to catch this trend. We started buying gold back at $250. Even at $1,600, it was one of the best trades that anybody has seen over the last decade. Gold has done better than probably any other commodity over the last decade, and I think the next 5 years are going to be amongst the best that we've ever seen, with gold breaking out and possibly going not only above 2,000, not only above 3,500, but very possible to see prices in gold over $5,000. Now again, as the markets go higher and higher, we have to reanalyze and see the support and resistance levels, but again, at this point, I'm very impressed with what we've seen in gold over the last 8 or 9 months. Again, this market could have totally fallen apart with the negative attitudes of Wall Street and, again, paper asset managers type of thing, but gold is trading at $1,620, $280 off its high, and we've had weeks where we've seen gold go up $200 to $300. So, again, I'm still extremely bullish. I don't believe that anything has changed in our attitude towards the hard asset market. And in actual fact, as inflation picks up, and that will definitely happen, especially when QE3 does come out, we could be looking at an explosion in gold because there's so many people that are out of the market at this point. I just think it's a perfect scenario to see precious metals move substantially higher. The weather throughout the country has been extreme. We're suffering one of the worst droughts since 1980, and all you have to do is watch the price of corn, wheat, and soybeans at this particular point to realize what's happening in the food complexes. Again, with this extremely hot, dry drought that's going on, it's killing off a massive amount of grains, and that's eventually going to affect the cattle markets as well. So all those scenarios, along with oil and weak currencies, are extremely inflationary. And again, the unfortunate thing is, during these extremely difficult times, the last thing in the world we needed to see was a drought in the Midwestern part of the country that's causing the price of food to absolutely skyrocket. With oil trading at $90, even though it's been to $110, the fact is that $90 crude oil is still extremely inflationary. Don't forget, for most of the time that we've traded oil, and when we started the show back 11 years ago, crude oil was at $20. It's moved up to $90, $100, and $110. So, again, all of the commodity markets that we've recommended at this point have done extremely well over the last 10 years. But I do believe the best is by far yet to come. And again, if we have to deal with a world economy in the way that we are dealing with it, because obviously as individuals we have no control over what countries do and what governments do, but as small investors, if we're making the right move, we're in the 1%. We're in the ones that at least are holding in there and not losing our money. And over the last decade, we've made a huge return in our precious metals markets and our crude oil markets. And again, now you're going to see inflation pick up because of what's happening in the Midwestern part of the country as corn, wheat, and soybeans skyrocket. That's extremely inflationary. And again, oil could go substantially higher with what's happening in the Middle East. Between Israel, Iran, all you have to do is turn on the news and see what's happening with Syria. Iraq is under attack at this particular point. All hell seems to be breaking loose all over, and as people get more and more desperate things tend to happen. What we need to do is keep our heads about ourselves. We need to be calm and sane at this particular point because, again, as small investors, what does a small investor do to get through these difficult times when there's countries and governments that are going bankrupt? We need to diversify and make certain that the assets that we have are sound and real and that we're holding on to them ourselves. And basically, gold and silver physically, it doesn't matter what the volatility is. It doesn't matter what gold and silver are going to do on a day-to-day basis, obviously, unless major support and resistance levels are broken. The trend is your friend, and the trend for gold and silver is for those markets to go substantially higher, as is crude, because of the world financial situations. As far as my portfolio goes, I own physical gold, I own physical silver. I personally own no stocks in this economy at all. I have invested in crude oil for the long term, and I do own most of my money in diamonds type of thing. So all of our assets that we have at this point tend to be hard assets. And again, the hard asset market is definitely the place to have your money because you're not trading. You're buying and holding, and that's how you're going to make the money in the markets. If you're buying and selling commodities on a short-term basis, you're going to have your share of winners and losers, but over the long term, 90% of the people that trade those markets are going to lose their money. We want to be buyers and holders. If we believe the trend is intact, there's no reason to be buying in and out of this market. And I do believe we're very, very close to a breakout in precious metals, and that's primarily going to come from money going back into the system. And there's no way in the world that I see that cannot happen unless the United States and Europe wants to have a stagnant economy like Japan has had for the last decade. So all in all, we've done extremely well. The fact is that gold is sitting at 1620. It's done very, very well with all the bashing that's gone on over the last 8 to 9 months. I believe by the end of this year, we are going to see new highs in the gold market. We're going to see possibly silver get back up to the $40 and maybe $50 level. So obviously buying it below $28 is a tremendous buy. I think that crude oil is one of the better investments. I would buy it and certainly put it into your retirement savings plan for the long term because the world needs oil and China is buying all that they can. The other situation in precious metals, which are very, very important, is the stockpiles of gold and silver. Evidently, the metals markets and the futures markets are not trading heavily, but the cash market, the physical market for gold and silver, is extremely tight, and most of the physical buying is coming from China and Russia and India. So what does that tell you? The fact is that if countries of that size are buying massive amounts of gold and silver, and China is telling their citizens to invest in physical gold and silver, if it makes sense for a government like China to do it, it's got to make sense for us to look at it also. Again, if they're putting that much money into the gold market physically, it makes sense for us to have that hedge also. If you're a believer in insurance, if you have insurance on your home, your car, your health, your life, and all that, you've got to have insurance on your financials. And if you don't own gold and silver, you have no insurance against high inflation. And again, the main reason why we recommended gold and silver 10 years ago or 11 years ago was because we felt that we are going to see massive inflation over time, and again, that has not changed. In actual fact, I'm more convinced that we will have massive inflation within the next 4 to 5 years, and that's why we're still buying heavily into the gold, silver, oil, and diamond markets, because those are the 4 markets that will respond to inflation better than any other market. I'm extremely excited about what I'm seeing. Again, do I believe that Europe has got its act together and everything's going to be fine? No, I don't. I don't believe that that's going to happen. So what I do believe is going to happen is that they're going to put a ton of money back into the economy in order to spur the economy, which is dead. Do I believe that the United States is in great shape and everything is going to be well here? Absolutely not. I think that the United States financially is on the verge of financial destruction. And if they don't get their act together, you're going to see the largest economy in the world fail. And the fact is that the U.S. dollar will continue to fall. And as the U.S. dollar falls, gold and silver prices will skyrocket, as will other commodities. So again, it's only a matter of time for this to happen. And now we're at a very crucial point. The markets are like a coiled spring and ready to pounce. And again, the markets I would like to own, the assets I would like to own at this particular point are gold at $1,600 in that area, silver below 30, the crude oil market below 100, and you definitely want to own diamonds. In fact, when you hear what Forbes magazine and Forbes has said about the diamond markets this week, you're going to run out and buy diamonds also. So all in all, no matter what is happening around the world, we're still looking extremely strong. We're still very, very bullish, and I believe by the end of the year, we're going to see massive moves in gold, silver, oil, and we could see a massive drop in the U.S. dollar. And again, I know it sounds crazy, but if they do come out with QE3 this before the end of the year, which I believe they will, that is very bullish for stocks also. You will get a quick run up in the market that could take the Dow over 14,000. Not that makes us bullish, but again, there will be a move in all of those markets coming before the end of this year.
Go to the website wwpmc.com, wwpmc.com. The company Harold recommends you use when it comes to investing in precious metals is Worldwide Precious Metals. Their website, wwpmc.com. You can speak with them personally and privately on the phone. 1-866-623-2002 is their telephone number. 1-866-623-2002. They can help you manage your precious metals investment account. They'll educate you about the metals markets and help you start your own account. You can trade if you want. You can buy or hold. They're there to help you maximize the profit, minimize the risk. And what is very important in all this, they're the experts in this very specialized market. There have been a lot of Johnny-come-latelys sprout up. They haven't got a clue about what they're talking about. Worldwide has been in this bull market the entire way. They've been in business 10 years. They have 10th anniversary incentives. You can speak to them about those. And remember, this is a liquid asset you can buy and sell with a phone call. Speak with Worldwide Precious Metals about starting your own precious metals investment account today. 1-866-623-2002, the website wwpmc.com. One of the stories that came out this week, Ron Paul's Audit the Fed bill passed the House in the United States. It has to go to the Senate in the United States now. They're not too sure if it will pass, but obviously a very happy Ron Paul. The Audit the Fed bill got through. Ron Paul, an advocate for the gold standard. And as we mentioned off the top of the show, Bill Gross coming out saying on Twitter that you should be in real assets. Stephanie Pomboy interviewed in Barron's. You can read that article in our newsletter saying that she believes that possibly gold will be backing money again, be in hard assets. We thought many years ago there was the possibility you could see gold backing up paper currency again. Although many people thought it was just crazy talk, and it's turning out that it's not so crazy after all. Get our free weekly newsletter, read the stories, educate yourself, listen to our radio show on a weekly basis. The telephone number 1-866-623-2002 to invest in precious metals, the website wwpmc.com. Some of the highlights we have from articles in our newsletter. John Hathaway, money manager, said this week, so it really all comes back to gold. The issues for paper currencies are not isolated to the euro or the dollar. It's the whole system that's based on an unanchored paper currency market. We are at the end game for that. And over the next 3 years or 4 years, I think we will see gold reintroduced as an official monetary role. That can only be done at substantially higher valuations in terms of paper currency. That's why you want to have an allocation of precious metals before this happens. As well, we have Michael Pinto saying, it's the height of stupidity and hubris to believe that the entire globe will not find an alternative to the U.S. dollar in debt. We are reaching a point where it becomes totally apparent to the world that the U.S. cannot service its debt. This is why every time you see a sell-off in gold, there's a bid coming from certain entities which is supporting the gold price. The bottom line is we have a world which has been dominated by fiat currencies, and we are now experiencing the end, the final throes of that failed experiment in a purely fiat money-based system. And the primary beneficiary of this collapse will be gold. In fact, Jim Rickards, who has written a book called Currency Wars, you can read the article in our newsletter. I expect gold to go to $7,000 by the next several years. You can read that article. He is very confident that there possibly could be a new gold standard. Now is the time to start your precious metals investment account. Get our free weekly newsletter. Educate yourself. The telephone number 1-866-623-2002. Speak with the experts from Worldwide Precious Metals. wwpmc.com, telephone number 1-866-623-2002. Going to come back and talk about diamonds. We have an outstanding featured diamond. We have some interesting information on diamonds for you. We'll continue our radio show after this break as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on July 27, 2012. Today is a Friday, the opening ceremonies of the Olympics. We wish all the Canadian athletes nothing but the best. And if they don't get gold or silver or bronze, there's always diamonds. You can talk to Harold about diamonds. Don't forget, the radio shows are on QR77 in Calgary, AM 640 in Toronto, 630 CHED Edmonton. Ever miss a radio show? They are archived on Herald's websites, rarecoloreddiamonds.com, also HESradio.com. We have a podcast you can sign up for through iTunes. If you have an iPad or a smartphone, an iPhone, you can hook up the podcast through those devices as well. We are portable. You can take us anywhere you want to go. The telephone number to invest in precious metals. The company Herald recommends you use Worldwide Precious Metals. Their website, www.pmc.com. The telephone number to connect with them, 1-866-623-2002. Speak with them about getting our free weekly newsletter. We send it out via email free of charge every week. Now is the time to deal with experts in this field. Let them educate you as to why you need to start your own precious metals investment account today. And we promised we'd talk about diamonds as usual. Herald's website is rarecoloreddiamonds.com. It is the number one website on the internet for rare colored diamonds, naturally fancy colored diamonds. And we have a stunning featured diamond of the week. You can see it on the website. This week's featured diamond is a 0.33 carat marquee cut fancy intense pink diamond. Now let me educate you about pinks. I went back and dug up some info. More than 90% of the world's pink diamonds come from the Argyle mine in the East Kimberley region in the far northeast area of Western Australia. They say this mine is probably going to run out in about 2018. And then that is it. At Argyle, pink diamonds are making their way into the annual tender. They are literally 1 in a million. For every 1 million carats of rough diamonds produced from the mine, only 1 polished carat is offered for sale in the tender. In terms of global diamond production, pinks make up only 0.03%. Large pink diamonds tend to go to museums, are gifted to royalty, or end up at auction houses such as Christie's and obviously Sotheby's. Christie's has auctioned only 18 polished pink diamonds over 10 carats in their 244-year history. Experts agree that the prices for colored diamonds, pinks in particular, are on the rise, noting that a barrier was broken recently in the recent years that thrust pinks previously selling for $500 to $600 a carat into the $1 million a carat realm. Buying a pink diamond today is like buying a Picasso while he was still alive. You can see the video of our featured diamond. We have a link to it in the newsletter. You can get our free weekly newsletter from Herald. Connect with him at rarecoloreddiamonds.com or call him at 1-800-432-1022. But go to the website, rarecoloreddiamonds.com. Take a look at our featured diamond. It is absolutely stunning. And 2 other facts I want to pass on before we get to Herald. This is from the Forbes article Herald mentioned. A 5-carat fancy yellow diamond increased in value by 180% from 2001 to 2011. Compare that to Berkshire Hathaway stock, which increased by 52% for that 10-year period, and Coca-Cola, which grew 42.5%. A $600,000 investment in a 5-carat fancy pink would yield about $3 million today. Also, Bruno Scarselli said natural colored diamonds make up only 1% of global production, which gives them unquestionable value. There is tremendous demand for yellows, also blues and pinks. There are not enough diamonds to satisfy 1/10 of new billionaires that are being created, and actually even millionaires that are being created in the Far East every month. Harold, the information we have on diamonds, the diamonds we have to begin with are stunning, but the information is just getting stronger and stronger week after week.
Well, I couldn't be more pleased because, again, before we brought rare colored diamonds to the forefront, nobody even talked about them as investments because it's always been a quiet market. You know, the fact is that in the diamond business, the diamond cutters, they buy parcels of diamonds, rough diamonds, and then they cut and polish them. Within these parcels, it's almost like a mystery bag sometimes. You end up with some very large, rough diamonds, and they could turn out to be very, very valuable in a lot of cases that they do. And that's where these major diamonds come from. When these cutters buy these parcels of diamonds and they sift through them with their gemologists, and they find out which ones are the rarest ones. And again, in the case of, and many times with us, we bought parcels of diamonds, and there's been a beautiful green or a big pink or a blue or whatever in there. And then when they're cut and polished, most of the time, those diamonds would go into jewelry and be placed in jewelers' stores like Harry Winston's and Cartier and Graff's and that type of thing. However, these diamonds are tremendous investments. And what we brought to the forefront was not only these diamonds as investments, but we built a secondary market to resell the diamonds, which nobody else has done. So the fact is that we've created for our clients an avenue to invest in very rare diamonds, and you don't have to buy the $1 million, $2 million, $5 and $10 million diamonds that Christie's and Sotheby's offer at auction, because our auctions are more for lower priced diamonds. Very high quality, diamonds that go up by 25-30% a year, diamonds that never ever fall in price, but you can get involved in the diamond market for as little as $15,000. You can buy a yellow flawless diamond, invest in that, take delivery of it, we ship the diamond directly to you, and those diamonds increase by 25% a year. They double every 4 years. So a diamond that you can buy today for $20,000 in 4 years from now is going to be worth $40,000. 4 years later, that diamond is going to be worth $80,000. So most of our clients that buy those type of diamonds, they buy them for retirement. They put them away for safety. And that's never been more important than it is right now, because the fact is that everything is so dangerous out there in the markets. To have an asset that is safe, that never falls in price, and that doubles every 4 years is just a phenomenon. Because tell me any other investment that will do that at this point without taking the risk. So looking at what Forbes said again, a 5-carat fancy yellow diamond increased by almost 200% in a 10-year period. Now the times are different. That same 5-carat diamond, if it's flawless, and those are the type of diamonds that we carry, only flawless yellows, that diamond will double in less than 3 years. That diamond can actually double in 2 years. So how do you double your money in any investment anymore without taking risk? The fact is that if you have the wherewithal to invest in a 5-carat yellow flawless diamond, and if you go on my website, rarecoloreddiamonds.com, these are the diamonds that I've invested the heaviest in. I've got diamonds starting at a carat and going up from there. When you get to a 2-carat diamond, those diamonds are 1 in 15 million, and I can guarantee you that most diamonds that are over 2 carats are not flawless. Mine are. Then you start getting into the 5-carat diamonds, which I also have, and those diamonds take on a life of their own. But I also have diamonds in the 10-carat range that are flawless. I've got a 25-carat flawless, and I've got a 30-carat fancy intense yellow internally flawless diamond that I would sell in and around the $1.6 million level, and that diamond at auction could easily go for $2 to $3 million in about 3-4 years from now. So those are the type of assets that we offer to our clients because they're safe. They never, ever fall in price. They're portable private wealth. It's like carrying real estate in your pocket. And again, most of the diamonds, especially that 30-carat fancy intense yellow flawless, you'll never, ever see a diamond like that. The only way that you would ever see a diamond like that is if it's coming for auction at Christie's or Sotheby's, or if you happen to go into a store like Graff's, and a store like Graff's would charge more than double what we would charge because we're not retailers. We're wholesalers that sell investment quality diamonds to our clients for strong investments, and then we resell the diamonds for you when the time is right to do so. So as a client of ours, of Rare Colored Diamonds, we keep in very close contact with you. We send you newsletters each week, and we're coming out with our new newsletter starting next month on diamonds. So you'll can subscribe to that, and it's totally free of charge, and it'll be loaded with information, auction results. We'll start our auctions again in October. So we own 8 Seagull Fine Auctions. It's an auction site that we built for our clients to resell their beautiful diamonds, and nothing like this has ever existed before, and nobody has ever really thought about creating or had the wherewithal to create a secondary market to resell diamonds. The reason that I can do it is because of my following. I've been on the radio throughout my career for over 25 years. I have a huge following. I'm a Canadian living in the States, so my radio shows have played in Canada for well over a decade. I'm extremely well known. I just came back from Edmonton doing a seminar for over 800 people. So basically, we have the wherewithal to help our clients get through these difficult times, and the strongest assets to buy and the safest assets are diamonds. Yellow flawless diamonds, as Randy mentioned at the beginning of the show, Argyle pinks. We also specialize in green diamonds. You're going to find that green diamonds, which are priced very low at this particular point, because a lot of people don't know about green diamonds. When a green diamond comes out of the ground as a rough diamond, it appears black. And for many, many years, the cutters didn't know that these diamonds were actually green. They thought that they were black diamonds, which are the lowest quality colored diamonds. Now, what you actually do on a green diamond is when you peel the skin back, then you discover that you've got a green diamond. Now, the fact is, and this is really amazing how this worked out, is that for years, these cutters were selling these diamonds as black diamonds at $400 to $500 a carat, when they were actually worth $300,000 to $400,000 a carat. So now to get a green diamond is nearly impossible. We specialize in green diamonds. We cut our own green diamonds, and what you have to do with a green diamond is you literally have to send it to the Gemological Institute of America in New York to be looked at while it's still a rough diamond, because green diamonds are so difficult for GIA to grade that if they don't know the cutter and they don't see the diamond as a rough diamond, they're going to possibly bring it back as undeterminable, and that would be a disaster for the cutter. So we do everything 100% correct according to Hoyle. What we do is we submit our rough diamonds to GIA while they're still rough, and then we go through the grading process like that. To own a green diamond at this particular point, green diamonds, in my opinion, are going to be the equivalent of blue diamonds, which are the second most expensive diamonds in the world next to red diamonds. And if you're one of the very, very fortunate few to ever own a diamond like that, you've got an investment that will do nothing but make money for you over the long term. In actual fact, to educate you, we're just completing a book that we're writing on green diamonds that will be available for free for all of our listeners, because, again, all we want is for our listeners and clients to get through these difficult times and do extremely well. Yellow flawless diamonds are our biggest business, those in Argyle pinks. They're still reasonably priced. You can get involved in the market for under $20,000. You put a $20,000 investment in a yellow flawless diamond, and you put a $20,000 investment in the stock market, and in 10 years, your $20,000 diamond is going to be worth close to $100,000, but what is your stock position going to be worth? Again, at this particular point, to me it doesn't matter what is the name of the investment. To me, it's what gives my clients the greatest return with the least amount of risk, and at this particular point, it's the diamond market, the rare colored diamond market. So we carry some of the rarest diamonds in the world. Most of them are not on our website. I have diamonds starting at $15,000, and we have diamonds actually going up over $50 million. So we can certainly handle anything out there that anybody wants, but for the smaller investor, I very strongly recommend the yellow flawless diamonds and the Argyle pink diamonds. Those diamonds will go up the most in value percentage-wise, along with D flawless whites. Now, we invested very, very heavily in white diamonds that are perfect. Last year, D flawless white diamonds went up 45% in 1 year. Tell me any other market that has done that. I've got D flawless diamonds starting at a half a carat that are under $10,000. We've got D flawless diamonds over 20 carats that are in the $7 million range. And again, these are amongst the best diamonds in the world that you can buy. We specialize in color diamonds, but we did bring D flawless whites in because they're as rare as these amazing color diamonds. And again, dollar per dollar, all we want is for our clients to get through these difficult times and do extremely well. So we have yellow flawless diamonds, and we have about 300 in inventory. We invested very, very, very heavily. My cutters cut 90% of the world's flawless diamonds. And again, most of our yellow diamonds are all flawless. Those diamonds all go up by 25% a year, and again, over a period of inflation, like in 1979 and 80, these were the diamonds that went up 500% in 2 years. So if we're correct on inflation, which I believe we are, and we see the inflation levels increase in the next 4 to 5 years, which I believe we will, and the reason I'm saying 4 to 5 years is that the Federal Reserve in the U.S. said that they're going to keep interest rates at close to zero for 4 years, and then they're going to have to start to raise them and reinflate the economy after that. When that starts to happen and interest rates go up and and the dollar again will go up also because of raising interest rates. These diamonds will skyrocket in price, and we could see in a 4 to 5 year period a diamond go up as much as 400 to 500%. We want our listeners and our clients in those markets. They're the safest markets to be in. They'll do the best for you financially, and there's no risk to them whatsoever. And again, the biggest problem with diamonds over the years was the fact that once you buy them, how do you resell them? If you had to resell a diamond and you went to a jeweler is going to try to get that diamond for as little as possible. We didn't want our clients to have to go through anything like that. That's why it took us 2 years to build 8 Siegel Fine Auctions, the only live auction site on the internet that's real time and live, and I sell every single piece myself for you. So the fact is that we built this amazing secondary market for our clients to resell not only extremely rare diamonds but very high-end collectibles. Back about 7 or 8 years ago, when we were very heavily into the gold and silver markets, we had offered to many of our clients very beautiful collectible coins. The Libertad 1 kilo coin set and some beautiful South African coin sets, and many of our clients invested in those assets. We've recently started reselling those for some of our clients, and they're making 200 to 300% on their money on coin sets that we sold to them 6-7 years ago. In fact, one particular client that bought a Libertad, which I know is Randy Marshall's favorite of all the coins that we've had, it's a 1 kilo pure silver coin that went from $1,500 to $4,200 within the 6 years that the client bought it. Tell me any other investments that have done that well. We also offer emeralds, rubies, and sapphires, and amazing things that we can do with our auction site. But we built this for you, the listeners to our show, and our clients, and no other firm has been able to do what we've been able to do in the rare colored diamond market. It's my only business. I've sold off every other business that I own because of my love for the diamond business. And the fact is that when you see these flawless diamonds and these beautiful pinks and these magnificent greens and blues and reds, it will literally take your breath away. You know, at the end of every month, when you look at the statements that you get in the mail from your brokerage firms and you look at what your stock portfolio is doing and what your retirement funds are doing, it can make you sick to your stomach. But the fact is that if you put some of your money, especially for retirement and for your future, into a beautiful ring for your wife, let her wear it for the next 10 years, and then we'll sell it for you on our auction site, you'll see returns in these markets like you'd never ever dreamed before. And again, the pride of ownership and the look on your wife's face as she's wearing this beautiful diamond out is just a phenomenal thing. I'll tell you, it's just the best investment to invest in at this particular time with all the uncertainty in Europe, in the United States, in China, and everywhere else, to have an asset that never declines in value, that increases by 25% a year. And in the case of Argyle Pinks, when that mine closes in less than 8 years, you could see diamonds you can buy today for, let's say, 40 or 50,000, an Argyle Pink, they could be worth 400,000 to 500,000, 10 times what you paid for them when that mine closes down, because the simple supply and demand scenario definitely works in diamonds. And when 95% of the world's pink diamonds are gone, what do you think is going to happen to the prices? Again, in the newsletter, Forbes has said that over a 10-year period, that a 5-carat pink or a 4-carat pink, which I also have on my website, they went up 500% just on pink diamonds, from $600,000 to $3 million. So we have pink diamonds of that size. They're not inexpensive, but they're a fraction of the price that if you went into a high-end jeweler's. All we want is for the listeners to our radio show and our clients to have the opportunity to do the right thing for their families and for their financial future. And between gold and silver physically and our rare colored diamonds, we're going to get through these difficult times, and we're going to do extremely well.
The thing that really amazes me, we've been talking about this for a long time. We've been doing the show for over 10 years. And it's amazing to me how many people are smelling what we're cooking now. There's some really smart financial minds who are saying get into hard assets. And the person to deal with is a guy who was there at the very beginning, Harold Siegel. He was the one who told us about natural fancy colored diamonds, rare colored diamonds, back in August of 2005, when no one was talking about them, when no one was saying you should invest in them. Harold was there. RareColoredDiamonds.com, the website, #1 website on the internet for naturally fancy colored diamonds. He is number one in the world, and you can see his featured diamond this week, a 0.33 carat marquee cut fancy intense pink diamond. And the thing that always sticks with me is pinks make up only 0.03%. It is like having your own Picasso painting, and when you see this featured diamond, you will be stunned. Get our newsletter from Harold. We have a diamond section, rarecoloreddiamonds.com. We have a diamond section. Get the newsletter from Harold. Connect with him at rarecoloreddiamonds.com. The telephone number 1-800-432-1022. To invest in precious metals, go to wwpmc.com. Worldwide Precious Metals, that's the company Harold recommends you use, a Canadian company in business for over 10 years. They have 10-year anniversary celebrations underway, incentives. You can speak to them about those incentives. Their telephone number, 1-866-623-2002. One of the things that I always keep a very close eye on, because I believe the United States, not only is Europe in trouble, but the United States is facing a debt time bomb. And it seems that the politicians in the United States don't seem to want to deal with it. In the U.S. debt and deficit section of our newsletter, the U.S. federal government's debt jumped more than $1 trillion for the fifth straight fiscal year. 5 straight years, $1 trillion. Barack Obama, he said that George Bush, it was criminal what he was doing with all these deficits. He's done the exact same thing, and that's what you expect from politicians. Also, we know there's a financial cliff in the United States that's coming up at the end of the year. When they fought the debt ceiling about a year ago, it ended up costing them $1.3 billion in extra borrowing costs as a result of the showdown over the debt ceiling. Also, a new report coming out from Paul Volcker, who used to be the Fed chair, along with Richard Ravitch. They have determined, they've taken a look at states' finances in the United States. They say that states face significant threats to fiscal sustainability. Also, we keep hearing about how great the GM bailout was. Well, guess what? They actually still owe the U.S. government $42 billion. You can read that article. But these are the two big ones, Harold, and this is where I'm talking about a debt time bomb. U.S. public pension shortfall, $4.6 trillion according to a budget group. U.S. public pensions are $4.6 trillion short of the amount of assets needed to cover projected liabilities. You can see that in the newsletter as well. Another article from the New York Times. Private pension plans, even at big companies, may be underfunded. After years of poor investment returns, companies are in trouble. In fact, they have about $1.68 trillion of obligations. The assets are $1.32 trillion. That leaves $355 billion that they're on the hook for. The largest ever, according to Standard & Poor's. Harold, we have about 2 minutes left here. This debt time bomb, this is why you want hard assets. You know, paper, it can evaporate. A hard asset, diamonds, gold, silver, these things cannot be printed. You can't print gold, you can't print silver, you can't print diamonds. It can't just disappear or be printed. This is why we're advocating our position in hard assets today.
You bet, Randy. And again, at the end of the year, a lot of tax breaks and everything are going to expire, and it's going to make the economy even tougher to deal with. So, again, you're right about the politicians. They always kick the can down the road. They always blame the other person, but I really don't believe in November much is going to change, no matter if Obama stays in or if Romney gets in, because, again, the severity of the problem is just not solvable at this particular point. It's going to happen over a longer period of time. But all in all, it's a frightening situation because it's not only one country, it's several. And the fact is that the greed and stupidity of the 90s caused all of this, and now we're paying for it, and our kids and grandkids are going to pay for it further down the road. Again, all in all, this is a very difficult time, but again, I think that we can see which route we really need to take. All of this is pointing to high inflation and hard assets doing well, and all we need to do at this point is stay conservative, not speculate, keep some cash on hand, own physical gold and silver, diamonds, oil, all the inflationary markets, because there is no doubt that these economies are going to have to reinflate, and at that point, we're going to be there to cash in. So that's the way I see things. I'm very optimistic and bullish in a very, very negative world at this particular point.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day. Thank you for listening to the show.
Craig Ferguson on his TV show said the original Dallas series started in 1978. Back then, America was very different. We had an ineffective one-term president. Gas prices were through the roof, and we were in a standoff with Iran. I'm glad those dark days are over. Obviously, things are just exactly the same. Get our newsletter this week. Read what Bill Gross has to say about being in hard assets. Also, Stephanie Pomboy, read that article from Barron's. She's saying get into hard assets. Now's the time. Worldwide Precious Metals, their website, wwpmc.com, telephone number 1-866-623-2002. Connect with Harold, rarecoloreddiamonds.com, the telephone number 1-800-432-1022. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.